Hello everyone, thank you for tuning in today, and welcome to Selling Vega, a page dedicated to educating the retail investment community in order to help all of you make some money. Today's video will consist of a beginner's guide to candlestick charts. We'll go over what they show you, as well as some common patterns that you can use in your trading or investing. This is the first in a series of videos on charts, patterns, and indicators, so please like and subscribe our page, as well as hit that alert button so you know firsthand when I drop new videos in this series. Now, without further ado, let's get started. Alright, so let's get right into how to read candlesticks. To start, we'll be talking about the anatomy of a candlestick, how candlesticks are affected by different time periods, and later on in the video we will even be diving into how these candlestick charts can help us determine and predict market direction using some of my favorite patterns. Candlestick charting is simply a method of displaying price information in a market. Unlike a simple line chart, as you can see here, a candlestick chart will give you more information. It'll specifically show you 4 data points: the open, the close, the high, and the low. A candlestick has 3 basic features. You have the body, which indicates the open to close range, and that's the rectangular box that you see on the candle in that image. You have the wicks, which are the long, thin lines above and below the main body. These reveal the highs and lows for the candle. And then you have the color, which represents the direction of price movement. A green body shows a price increase, meaning the stock price closed higher than when it opened, while a red body indicates a price decrease, meaning the stock price closed lower than it opened. The colors may sometimes vary by platform, and they can be changed. I like to use TradingView for my charts, as it really is the most intuitive, and it's also free, so I highly recommend it, and I'll be using TradingView for my charting in all future videos. Okay, so we reviewed each marking on a candlestick, the opening, closing, the high, or the low, and on their own, those words make a lot of sense. You can figure out what the high price means, but their meanings can get a bit confusing when it comes to candlestick charting. For example, what comes into your head when I say the phrase closing price? I bet you think of the stock market close at 4 p.m. And you're right, that is the close of the day. And on a daily candlestick chart, which is what I have up on my screen, each candle represents 1 trading day of price action. The candlestick close is equal to the last price traded on the day at 4 p.m. Eastern Time. And this is where time period becomes important for candlesticks, because as the time period of your candle is determined by the time period of your chart. For example, what if we switch to a 5-minute chart, where a new candle is created every 5 minutes? Well, sure, the market still closes at 4 p.m. every day, but on a given day, there are 78 5-minute candles. So you can see everywhere here, this is an entire day's worth of trading information with 78 candles there. And this is the 5-minute chart for IWM, by the way, the Russell 2000. And you can see each candle has its own unique high, low, open, and close. So every 5 minutes, there's a new 5-minute high or 5-minute close. And these values are arbitrary, I guess, in nature, and they don't really have any inherent meaning the way the actual open or close of a stock market at 9:30 and 4 do. However, they have meaning because many traders and many algorithms use these values throughout the day to create trading strategies by following patterns. So the more you know about it, the more you can get into the mind of what a trader or an algorithm might be doing with the market. You can see on TradingView just how many different time frames there are for charts. Some common ones traders use are, the 1 minute, 3, 5, 15 minute. Some more macro-focused, longer-term investors who like to find trends driving overall economies and stock markets, they'll use longer time frames like the daily, the weekly, the monthly, but you can customize it by period. You can really do anything with the time frame on TradingView, which is nice. And the best thing about candlesticks is that regardless of the time frame, the candlestick fundamentals that I showed you via this image will always hold true, and so you know you're always getting good information regardless of the time frame that you're in. Okay, so now that you have a basic understanding of how to read a candlestick chart, let's talk about how to read price behavior, otherwise known as price action. I'll be going over some of my favorite and some of the more popular candlestick patterns that traders use to try to predict future pricing of whatever asset or whatever stock you're looking at. But it is more than just understanding the types of patterns that can arise on a chart. It's also understanding why those patterns appear in the first place and how you can use them to interpret what is actually going on in the market between buyers and sellers at that time. All right, so let's pull up the first pattern that I'm going to be discussing today, and that is the bullish hammer. This hammer candlestick pattern is formed of a short body with a long lower wick and is found typically at the bottom of a downward trend. This pattern is a strong indication that a reversal may be about to occur. It tells you that for this time period, sellers attempted to take it down further and then got overwhelmed by buyers, so much so that the candle actually closed higher than when it opened. This is one of my favorite reversal patterns. Let's go back to that IWM daily chart and see if I can find you guys a hammer. And okay, here's one right here. So this is a good example of a bullish hammer. Let's zoom in right here. So let's look at what the market was doing prior to the hammer appearing on the chart. So it was, about 230 as a high point right here, and it basically dropped about 5 or 6%. Got as low as 207 on the day of the hammer candle, which is March 5th. But you can see here that sellers tried to take this further down. It actually made a new low relative to the previous several days. However, buyers then took over and really closed that candle higher and looked really strong. And the appearance of this bullish hammer is usually an indication to buy. And so you can see in the next several days, we got some strong upward motion into actually making a new high, a new, short-term high here. So if you had used this as an indicator to buy, you would have had a winning trade on your hands. All right, the reverse of the hammer pattern, or maybe the bearish version of the hammer pattern, is called a shooting star. It's typically found at the top of an upward trend. And this tells you that for this time period, buyers attempted to drive the price higher and did indeed make a new high, but then got overwhelmed by sellers, so much so that the candle actually closed lower than it opened. So this is another big reversal pattern that I use. And here's a good example of a shooting star you can see right here. Let's zoom in a little bit even further. So you can see a clear uptrend heading into this shooting star. And so 4 straight green candles, and then you get new highs here. But then by the end of this time period, which here is the daily, so by the end of this day, the sellers had actually taken over, and this candle closed lower than when it opened, which is again an indication of a potential reversal pattern here. All right, so our next pattern that we're going to be going over are the engulfing patterns. You have both a bullish engulfing as well as a bearish engulfing. Let's talk about the bullish first. A bullish engulfing pattern is formed with 2 candlesticks. The first candle is a short red body that is fully engulfed by the next bigger green candle. And it is perhaps the most sought after bullish candlestick pattern, as it is more confirming of a bullish move in the price of a stock. This pattern shows pure and unquestionable control by the buyers and typically results in higher trending prices. I like engulfing candles a lot, and we can point out several bullish engulfing candles just using this daily chart that can serve as good entry points. For example, here's one right here. Let me zoom in right here. Make sure you guys can see it. So here you see a red candle in the previous day, followed by a green candle that completely engulfs the body of this red candle. And so if you had used this as your buy point, you can see over the next few days that you would have had a winning trade. Now, similar to the bullish engulfing, you can also have a bearish engulfing, which is, the exact opposite. It starts with a green candle that is then completely engulfed by the next red candle that comes. And it again is a strong indication of a potential reversal. So we can see here, this is actually following the shooting star that I had just showed you. This would be another indication that, hey, maybe this IWM Russell 2000 is really ready for a downtrend. You got your shooting star, and then a couple green candles. The buyers were trying to fight to keep this IWM from going further down, and then you finally get this massive bearish engulfing candle right here, which completely engulfs the previous green, and you can see the ensuing downtrend that took place. Now, and these candlestick patterns hold true regardless of the time frame you're in. There are engulfing candles like this one right here, which can be a good indicator for an uptrend. Then you have a bearish engulfing right here, which is a signal for a downtrend for the next few time periods. Another engulfing right here that signaled a downtrend. So it really is, it doesn't matter what time frame you're in. These candlestick patterns are being used by traders regardless of the time period. So it is a good indicator and a good thing to understand, having knowledge of all these candlestick patterns. So the bottom line here is that candlestick charts have become the standard choice for technical traders today, and for a good reason. They give you plenty of information without making it difficult to absorb. Candlesticks can help you not only get basic price information, but also helps you get the pulse of the market at any time, giving you a visual of the battle going on between buyers and sellers. Being able to properly interpret that information can be a life-changing thing for traders and investors of any type. This video series will help guide you to learning the most popular patterns that pop up in charts every day. I'll be going over a lot more candlestick and chart patterns in future videos. So take a look at some candlestick charts for yourself, start identifying the patterns, and feel free to drop any questions or comments or feedback in the comment section that I can use and answer for future videos. Thanks again for watching. Please remember to like and subscribe to Selling Vega, as it really does help me and my ability to continue helping you guys. Happy trading. Let's make some money.